Should I use RSI or MFI? It's a common question that most traders ask, but the true answer is that both are important. The real key is how to combine them together to create a strong trading strategy. In this video, I will show you step by step how to combine RSI and MFI to find the best buying and selling opportunities. In this combination, there are some small but very important tips that can help you get better results. So make sure to stay with me until the end and pay close attention to these tips. Tools used in this strategy. Now let's talk about the tools we use in this strategy. First, we have the Money Flow Index or MFI. MFI shows us how money moves in the market. It tells us when people are buying a lot and when people are selling a lot. This is very important because it gives us the first signal about market direction. Next, we have the Relative Strength Index or RSI. RSI measures the strength of price movement. It helps us confirm the trend and shows if the price is strong enough to follow the money. By using RSI after MFI, we make our trade safer and avoid fake signals. Finally, we use candle confirmation. Candles show price movement for each time period. By checking the shape and size of candles, we can see if the price is really moving in the direction we want. Candle confirmation makes our strategy more reliable and helps us avoid entering the market too early. Adding the Money Flow Index, MFI. Before we continue, hit that like button. It helps the video reach more traders who need this. Okay, now let us add the Money Flow Index or MFI to our chart. But first, we need to understand what it is. The MFI shows us how money moves in the market. When money flows into an asset, it often pushes the price up. When money flows out, it often pushes the price down. This is why MFI is the first indicator we watch for a signal. To add MFI in TradingView, go to the Indicators menu and search for Money Flow Index. Click to add it to your chart, then go to its settings. The default setting with a length of 14 works very well. Next, click the Style tab. Uncheck the middle band and background because we don't need to see them. Keep the default overbought and oversold levels 80 and 20. Don't change them. Now you can change the color of the MFI and the levels and make them thicker so they are easier to see on the chart. Then click OK. Okay, now we have the MFI on the chart. When the MFI is above 80, it shows a strong buying pressure. When it moves below 20, it shows strong selling pressure. This is the first tool that helps us see potential market movements. Adding the Relative Strength Index. Next, we add the Relative Strength Index or RSI. RSI measures the strength and speed of price movements. It tells us whether the price is moving strongly or weakly. We use RSI to confirm the signal from MFI. If MFI moves first and RSI also moves in the same direction, the trade becomes stronger and safer. To add RSI on TradingView, go to the Indicators menu and search for Relative Strength Index. Click to add it to your chart, then open its settings. Keep the default settings, RSI length 14. Next, go to the Style tab. Here we only need RSI, RSI upper band, and RSI lower band. Uncheck the others. Keep the upper band at 70 and the lower band at 30. You can change the color of RSI and the bands and make them thicker for better visibility on the chart. Then click OK. Now we have RSI on the chart. RSI helps us confirm the signal generated by MFI. If it's above 70, the market is overbought, and when it's below 30, the market is oversold. Candle confirmation. Now let's look at a candle confirmation. Candles show price movement in each time period. We check the shape of the candles to confirm the price is really moving in the right direction. For a buy trade, look for a strong green candle with a large body and a small upper shadow. The body of the candle should be at least 60% of the total candle length, with no or very small upper shadow. For a small trade, look for a strong red candle with a large body and a small lower shadow. Again, the body of the candle should be at least 60% of the total candle length, and the candle should have no or a tiny lower shadow. Candle confirmation is very important because sometimes MFI or RSI may give a signal, but the price doesn't move as expected. A weak candle shows the market may not follow through. By waiting for candle confirmation, we reduce the risk of entering fake trades. Entry rules: buy and sell. Now let's learn how to enter trades. Buy trade. For a buy trade, we follow 3 important steps. First, check the MFI. It should move above 80, which shows a strong buying pressure in the market. Second, look at the RSI. It should be above 70, confirming that the price is moving strongly with the money flow. Third, wait for a strong green candle to appear. The candle should have a large body and a small upper shadow, showing that buyers are really in control. Only when all 3 conditions are met, MFI, RSI, and candle confirmation, we enter the buy trade. This combination helps us avoid fake signals and trade more safely. Sell trade. For a sell trade, we also follow 3 important steps. First, check the MFI. It should move below 20, showing a strong selling pressure. Second, look at the RSI. It should be below 30, confirming that sellers have a strong momentum and the price is moving down with real strength. Third, wait for a strong red candle to appear. The candle should have a strong large body and small lower shadow, showing that sellers are really in control. Only when all 3 conditions are met, we enter the sell trade. Remember, if any condition is missing, don't enter the trade. This rule helps protect our capital and avoid fake signals. Real market examples. Buy trade. Look at this chart. First, check the MFI. Here, the MFI moved above 80, showing a strong buying pressure. Next, check the RSI. The RSI moved above 70, confirming that price is moving strongly with money flow. Finally, look at this green candle. It has a large body and a small upper shadow, showing that buyers are really in control. So here we enter the trade. For stop loss, we place it just below the recent swing low. This helps protect us if the price moves against us. For a take profit, we can use a 1:2 risk to reward ratio. Look here, the price moves up and reaches our target perfectly. This example shows how the combination of RSI and MFI and candle confirmation works in a real trade. Sell trade. Check this chart carefully. First, look at the MFI. Here, the MFI dropped below 20, which indicates strong selling pressure in the market. Next, look at the RSI. The RSI moved below 30, confirming that sellers have strong momentum and the price is moving down with real pressure from the money flow. Finally, pay attention to this red candle. It has a large body with a very small lower shadow, showing that sellers are in control. This is the point where we enter the trade. For stop loss, we place it just above the most recent swing high to protect our trade if the price reverses. For take profit, we can use a 1:2 risk to reward ratio. Watch carefully. The price moves down gradually and eventually reaches our target. Okay, traders, that's it for today's lesson. Trading can feel tricky, but when you combine the right tools, your decisions get sharper and your trades become safer. If you enjoyed learning how RSI and MFI work together, you're going to like the videos on RSI with OBV and RSI with VWAP. Those strategies help you find stronger entries and exits. If you found this video helpful, hit that like button, subscribe, and turn on notifications so you never miss a strategy update. Thanks for watching, and I'll see you in the next video.